Good morning, everyone. Happy Valentine's Day. You know, this is a day that Corey and I specialize in. We are Valentine specialists, very romantic, self-proclaimed. Hopefully our wives agree.
Mike, I have to give a shout out to my oldest son. He's just always been very festive, and his mom is too, my wife. They love holidays.
Uh,
They really take it seriously. And my son woke up and he'll decorate any tree, he does it all. He
uh,
truly puts in the work. But he woke up yesterday and he normally wakes up, messes with some books, messes with some video games. He's like the early riser. So he'll do stuff before even breakfast because he's the only one up. But yesterday morning, he woke up and he made cards for everyone in the family for Valentine's Day. And he was so
oh,
excited. I just got to give him a shout out, just spreading the Valentine's Day love. It's very special.
there was a day and time, and I do not know if it still goes on in schools, but when I was a kid, you used to make a card for every kid in the class and
We
give them
did
a
that
little piece
last
of
night.
candy. And, nowadays, I'm sure you just send a group text message and Snapchat, and, there's no way we exchange candy.
No,
It
we
could be
do. We
dangerous.
loaded everybody up with red dye 40 and yellow stick. We
There
loaded
we
them
go.
up. So everybody's ready.
Well, awesome. Well, Valentine's Day, Corey is going to dive into stock performance on Valentine's Day. Is it red, Valentine's Day color, or is it green, the color we really want to see? He's going to hit on that. He's going to talk about, we always talk about volatility, and volatility is our friend, but we're seeing one stock that over the last 30 days has not had much volatility. It's just been a straight ride up. It looks like a 10-year return rate on a CD or something. I mean, it is as smooth as can be. We're going to jinx it because today is going to be the day that it doesn't do that. But I'll leave that surprise for him, and then I'm going to hit our fifth ego stock. So let's get started. This is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So Corey, take it away and let's talk Valentine's Day stock market performance.
All right. Just real quick, jumping in. So from the year 2000 to 2024, we've got a 63% win rate. And are we up today? Are we up
Yep,
this
I
morning?
think yeah.
A
Or
little bit, a little bit. Um, you know, Mid-February, seasonally, kind of a weaker time, just throughout the year. But you're eking out some modest gains most years. So, hey, let's keep that going. There is something called the Valentine's Day indicator, which is probably not a very valuable metric. However, it does say if the S&P 500 is up greater than 3% year to date on Valentine's Day, then you get these green forward returns 93% of the time, 94% of the time. And the median is 13%. Mike, I got to say,
I just looked, Corey. I just looked. It's up 4.09%.
oh yeah, no, we're on it. We're
So
on
hold,
it this
it's
year,
just
and
got
they've
to it's
got the
just got to
4%.
hold it through today, and then we're going to
Yep.
be blasting off. I love it.
Yeah, I really do think we get another double-digit year. I don't know if we should, but I think that we do. And so that's fair enough. Okay, now on to that stock. Um, since the
Okay, this
inauguration,
this is a stock that you've all heard of that is a core portfolio holding, which is Meta, which is Facebook. So give
yeah,
them
and
that.
Mike and I hit on this just a couple of days ago with the network effect companies, and I think did Meta have three of the top four, which is
Yeah.
just totally unfair. Wow. Um, yeah, Meta is if they close green today, green being up, they'll be on a 20-day win streak, and they are up. You can see they are up. So can Meta get a 20-day win streak? It seems that's crazy. And keep in mind, a couple of these days were barely green. They were just barely passing the baton. But nonetheless, I think you're up 24% or something in 2025, and just an unbelievable win streak. It made me wonder, what were some of the longest win streaks ever? Now, these are longest win streaks for the S&P 500. The longest win streak ever, daily win streak, multiple days in a row being up, was in April of 1971. You
Mm.
had 14 days in a row up. Mike, what surprises me, how many of these are double digit? What is that, about 15 or so?
Yeah.
I would have thought
Probability
that we
wise, it'd
get
be more often.
I would have thought, yeah. So anyway, a pretty rare phenomenon to go on a win streak that long. The Meta 20-day win
I,
streak is unheard of.
I
Unheard of.
was shocked when Corey told me about it. It's one of our core holdings, but I'm not looking at how many days in a row it's up. I knew it was up, but I couldn't believe it. I had to pull up the chart myself and see the the smoothness of that chart, going
Let's
up
make it 40.
from about 600 to 7, or no, from what was it? From 600 to 730. What was the price, increase?
Yeah, enough. It was enough for
So,
sure.
and of course I'm like, yay, that's one of our
Started the
core.
year at 590.
Yeah, I was like, that's one of our core holdings. We love it when it's one of our core holdings and it goes up that much without even like, not like anyone's jumping up and down and causing something to go up. It's just smooth rise. So,
And they made it through DeepSeek too. DeepSeek. So yeah, they made it through all of that with green days.
yeah.
Crazy.
Well, that's good news. I wish all of our stocks that we invest in were that smooth, but actually they never are. Yeah, this is the exception. I'm gonna have to do some more research to see what stock, other S&P 500 stock, has ever been up 20 days in a row, because there
I
can't be
couldn't
many.
find it. Yeah.
Well, let me hit on some other topics. So I'm going to talk about our next ego stock, and we've had a variety from uh, beauty care to dating websites to rocket launches to cancer detection systems. So today we're going to pick something very, very different, a diversified set of ego stocks. So I know that last year, the Cincinnati Reds, they got hot. I wanted to watch the Cincinnati Reds play baseball. There was some disagreement with whoever carries their games. And the only place that I could watch the Cincinnati Reds was to subscribe to a company called FUBO, and because they have live sports streaming. And I really didn't want to add another subscription service, but I did because I wanted to see the Reds. That's why I was drawn to this. I didn't know later on our team would come back. This wasn't, initially my recommendation. Team came back and said, hey, we love this stock. It looks like has a lot of upside potential. And I was like, I didn't even tell the team, like, yeah, I already subscribed to them, but I do. And so the company is FUBO. And really the biggest catalyst that I want to talk about is their partnership, or kind of becoming a Disney subsidiary. So if you think of Disney, they have Disney Plus, and they stream those Disney movie content that they own. And Disney still owns ESPN, I believe. I can't remember if they spun off ESPN or not. But
They
you
still
know,
have it.
sports streaming is a big deal. And Disney was actually in a lawsuit with FUBO, but somehow they came out of the settlement and they said, hey, we're basically going to buy you, or buy 70% of you. And this happened in January, and you're going to see the spike in the stock. Now, before this partnership, I would be very hesitant to buy FUBO. I mean, it was trading, $1 or something a share, and, being in a lawsuit with Disney, they could be taken out. So that would be like, I don't know if I would touch that. But now that they've got into this partnership mode, I like FUBO, and that's why it's been added to our ego stock. So let me share my screen, and I'm going to show you. Here's their website. You can go to fubo.tv, FUBO, just a little bit, you can see your channels and subscription services. And I know there's a lot of subscription services out there. I do see in the upper right, ABC, ESPN, so they're already getting some, Disney press here. Here's the announcement of their partnership. This came out January 6th, And let's see, FUBO between them, 6.2 million North American subscribers. And this partnership ability, the stock trades at a very low number. It's like $4 a share now, and I'm going to show you that in just a moment. A little bit more. Well, let's see here. Oh, it's the Forbes article on this. Under this agreement, Disney will own 70% of FUBO. So if Disney owns 70% of the stock, guess what? We're buying from that other 30%. So we're, that automatically reduces the shares outstanding, because guess what? Disney's not going to be buying and selling and getting in and out of FUBO. They're going to buy their 70%, and then we're just buying in that other 30% group. So here, and let me show you what the stock graph looks like. I backed it up to show a 6-month graph, because then you can see that Disney news. So before the Disney news, this stock traded at a $1.50, and of course it'd be like, oh yeah, I wish I would have bought it here, and then it goes up to $5.30 a share, in a day. You can't count on that kind of things. And if you knew it, it would be insider trading anyways. You'd just be lucky if you happen to purchase it here. But at this rate, in this zone, which is around $3.50 to $4 a share, this is where we've added it to our ego stocks. And we'll see what this does. It has the potential to, it's only a $1.3 billion company. So that means it is small. It is a small cap stock, but it has the chance to double or triple this year based on that partnership with Disney and where it goes and people's subscribing habits. It has a niche area of trying to get that live sports streaming. I wish there was an easier way to do this, but FUBO is a possible solution. It's not the only solution. I wish I could say that, but it is a possible solution. But with Disney's backing and that partnership, it's got a chance to really surge up. So that is FUBO in a nutshell. Corey, I knew you were one of the ones that was like, yeah, we should check this out.
Well, the underlying company on its own had close to pulling in on, it was $2 billion in revenue. We'll call it $1.6 billion in revenue, and was expected to be profitable in 2025, and that was on its own before they get all the Hulu subscribers and the Disney partnership. So the underlying company was fine. Mike, one thing about some of these dynamics with these bigger companies is they almost need a smaller player in the space. This came about because Disney was going through with something called venue sports, and they were going to kind of likely have a monopoly over the sports streaming market. In the courts, so them won the lawsuit, and so then Disney embraced FUBO, and that's where the strength comes from. But some of these companies, they need smaller players, because if there aren't any, then they have a monopoly, and they're going to get targeted by courts and all this. So it's important that FUBO plays a role in the space, and it's a quality company. They've done the right thing over time. Fundamentally, they're a growth company, and there could be some value unlocked through this through this partnership.
Yeah. And I'll just add on, to kind of, we're through 5 of the exponential growth opportunity stocks. And I get this question every once in a while, like, pick one, like what's 1 out of the 10 or 2 out of the 10? And I've kind of backed off. And while I do not have a list of 10, I do not rank the list of 10. I do not go, this is number 1, 2, 3. If you only want to buy 2 of them, buy these 2. I do not do that. And the reason why is it's a diversified portfolio of aggressive stocks. It's diversified. So, and I can look back in history to last year and say, boy, if I would have ranked my top 10, and I could pick them in my mind. Some of the top ones I picked didn't do that great. And number 9 or 10, surged up. And that's why I don't want to say like, oh, you should just pick this one of the 10. What we really do is in our aggressive portfolios try to invest across all 10, knowing that some of these are not going to surge up. And we're just counting on that some do based on our selections. So, I just
Mike,
put that out there. Yeah, go ahead.
on that note, there's a pathway to see FUBO reach around a $6 billion valuation in a relatively short time. Now, that's not the only pathway forward for FUBO. If it was, then everyone would be buying the stock. But that's the potential there, which would be a significant benefit to shareholders at these levels. So, like Mike said, these are those exponential growth opportunities. Obviously, FUBO was a growth stock on its own. Hulu was a growing company on its own, and together, we'll see how that plays out.
Awesome. Well, just want to say everybody have a great Valentine's weekend. Let's see if we stay in the green today for Valentine's Day. Let's see if Meta keeps their 20-day streak. If you did our March Madness last year, you picked Meta like now, and you got 20 up days in a row, you'd probably win the whole thing. That probably won't be happening at that point, but stay tuned. Have a great weekend and enjoy.